Okay, so we'll come back in here to pick up where we left off. All right, so let's talk about Charles Dow. We were talking about him. He's the master of technical charting. All of us who do technical charting now came from his world. So we talk about his simple trading system. He used to do this by hand, and he used to sit down every day when the market closed and work on these things. You can see what's going on here. This is a picture of the Dow from yesterday. You can see that up to the top there, I've got a circle. It's a bearish price. The Dow Jones is on a sell signal now with a downside target of about 13,760. You can see how these X's and O's work. X's indicate that demand is in control of the market. O's indicate that supply is in control of the market. And so right now, overall, uh, we had a sell signal with that column of O's there. This recent rally we had is that last column of X's on the right. So you can see that. The blue line there is the bullish support line. So that would, in regular charting, that would indicate that it'd be like the 200-day moving average in regular charting. So we're in a longer-term bull market and on a shorter-term sell. So that's where this market currently stands regarding the Dow. Now we can work our way into leverage ETFs. This is really kind of the heart of the program and what I want to talk about because they're a new, relatively new product. They arrived on the scene with a lot of fanfare, and they widely misunderstood. And so we're going to talk about what they are, how they work, what the dangers are, and what the opportunities are. So they seek to multiply the movement of the underlying index into 2x's or 3x ETFs. So they amplify, of course, both your returns and your losses. You can leverage long or short exposure to sectors, indexes, options, future contracts, swaps. They really are just a wide range of opportunity in the leverage ETF world. So they're designed to double or triple the daily moves of the underlying index. And so that is really an opportunity for day traders like you because they're repriced daily, not meant to be held for more than one day. And over a period of more than one day, the leverage ETF can either go against you or for you. It can compound in your favor or compound against you, depending on the movement of the market. That compounding effect over time will affect your gains and losses. And of course, during a period of high volatility like right now, that's even more amplified. So then, for instance, the Direction family of ETFs, they have the 3X ETFs. They have bull and bears. And in 2009, the financial bull and bear, they both had negative returns in 2009. So the key to that is you have to trade it like you're all here to learn how to do and to do. And because they're really effective in a day trading or a one-day holding period. So our leverage ETFs for you, and you've got to look at these and answer all these questions. You know, they're only intended for sophisticated investors like you are. You have to be able to accept substantial losses over a short period of time. You have to understand their performance and the unique nature of how they work. You have to manage those positions frequently. Sounds like what everybody here wants to do. So they're really ideally suited for what we're talking about here. So prospective investors need to know what you're doing. This is all from Direction Shares website, and they're not intended for use by conservative investors who cannot tolerate substantial, even complete losses in a short period of time. So it's an actively managed portfolio, actively managed vehicle. So it's perfect, really, for people like us who are trading on a daily or on a weekly basis. And you have to pay attention to these and monitor them. And I think, you know, for me, the answer is I'm comfortable with that. But you have to really know what you're doing, and that's why it's important to come to this with a trading plan. Because, as we mentioned, the leverage cuts in both ways. In the rising market here, the cumulative return will outstrip the regular return of the ETF itself. So in a rising market with a leveraged ETF, you're going to be ahead of the game. It's going to be compounding in your favor, which is what you want, of course, a nice situation. But if you get into a falling market, it's going to compound against you. You can see that the index only lost 25% in this example here, but your leverage ETF lost 60%. That's why they say that you have to really be careful with these and know what you're doing, not hold them for a long period of time, and then be able to trade them effectively using some kind of trading system that you feel comfortable with, going back to our previous point. On sideways market, that's probably the worst situation of all for a leverage ETF. Really, for traders in general, we want to see is motion one way or the other, of course. If the markets are moving, we're happy. If they're not moving, then that's not such a good situation for us. Particularly bad for us in a leverage ETF because you can see if the index made zero, you still lost money. So the idea is you have to figure out what kind of market you're in, and again, maintain that short holding period. Even you'll see the 3x ETF directions. That's mostly for day traders. People like you, people like me, if you're doing day trading, so you can be in and out really in one day and not hold them during the overnight position. The main leverage ETF providers are Direction, ProShares, and Velocity Shares. And the Direction is the 3x ETFs. The ProShares are the 2x, and Velocities are a variety of both. So here are my favorite ones, the equity leverage. You have the ProShares Ultra Short, SDS. You have the Ultra S&P, which are the SSO. Then the Financial Bull is the 3X. You have the Ultra Russell, UWM. Small Cap Bear, TZA, and the Ultra Financial by James. So you really see how this gives you a wide range of opportunities in any kind of sector you want. You can drill down to financial, small cap, international, emerging markets. You can pick which area you want to be in using these ETFs. Go into commodities, you have ultra silver, short long, ultra short long, and then oil, ultra short long oil. So again, you can build your own hedge fund here, really, and do any kind of thing you want using these leverage ETFs. You're not just restricted to a long short S&P or a long short Dow or any. You build a portfolio that has enormous versatility. That's a cool thing, and was never really available to retail investors before. I like the bond ETFs a lot. They're very stable, and the 2x up or down TBT is the short, and then UBT is the long. The Direction has a 3x, and so it's really, really a cool deal there because uh, the bonds are, of course, been very active lately. They're going to be very active in the future here. They say the trade of the century is going to be a short bond trade as interest rates start to rise, and I think there's a lot of validity to that. So TBT really could be something to keep a close eye on. It could be really the trade of the century coming up over the next few years. Then we have currency leverage ETFs. Go short the euro, short the yen, long the yen. So they're just, again, unlimited kind of opportunities here to build a portfolio and really your own hedge fund. Let's talk about some leverage ETFs trading strategies now, and that's really the heart of this thing. So you can go long or short. Of course, you can do index, commodities, bonds, or currencies. And again, the idea is figure this thing out and to do what works for you. That's really the key thing. Let's talk about leverage strategy number one here. There's several good ones. This is a standard RSI chart you can see here. And it's real simple to use. Anybody can do this. When the RSI is overbought up here in the 70 levels, you can see that the next move is going to be down. When it's oversold, see that the next move is going to be up. So RSI is a very simple thing. Anybody can do it. You can use it at home, really. You can do it while you're at work at your desktop. And so it's a very easy thing to do RSI. And see how these moves correspond up here with the RSI above and the RSI below. For the For the 14-day overall, you can see that it's a little slower, and if you want to be a faster trader, then you go to the 2-period RSI. So the 2-period RSI is really more effective for a day trader, the kind of thing that you guys want. So again, overbought levels up here in the 70s, oversold levels down here in the 30s, and you can see how the corresponding move on the S&P works with this thing. So it's pretty easy to use. That's been very quantified. People have done a lot of studying on the RSI, and it's an easy way to trade these markets. And again, it's easy to set up. I use stockcharts.com. You don't need real fancy charts. It's a free charting service even. You go there. It's got a big charting school. You can do different things you can buy. I'm not a salesman for them, but they're real easy to use. They got tons of information there, and you can see how that works on a 2-period basis. I've had great success with the 2-period RSI. In strategy 3, we got point and figure charting we just talked about. And you can do this on a 1-minute scale if you want. Use point and figure charting on a 1-minute day trading scale. And it's real easy to do that. Again, you have the X's and the O's, X's being demand and control, O's being supply and control. So those are buy-sell signals. You can just move up and down through here and make this thing work for you. So it's really simple to do that. And it's something that you learn how to do and use. And again, figure out the thing that works for you, whatever that trading strategy is that works for you. And trading strategy number 4 is MACD. This is probably my favorite. It's moving average, convergence, divergence. I use this all the time. Again, you can do this on any scale, 1 minute, 2 minute, 5 minute, and it shows you what's happening in the market. And it's real simple to use this thing to do it in all kinds of different ways here. So you have the price down here, and up here you've got the signal line crossing above is a buy signal, crossing below is a sell signal, and so on up and down. And you can see how this tracks the moving of the index down below it. So this is my favorite of all the simple signals that I use is MACD. And again, you can use it on any kind of level that you want. So use on 1 day with E-minis, leverage ETFs, with indexes. It's really just an unlimited kind of indicator. The other thing sure to take close advantage of too is when you have divergences, like here you have the MACD moving up, and then you'll see it when prices are going up, but MACD is going down, or vice versa. You have these divergences. That tells you that there's probably going to be a trend change ahead. So there's a lot that I read. There are a number of books out of this, including the one from the guy who invented it. MACD is worth taking some time with and studying and learning about as a really effective way to go. And I see Daniel says there's a huge divergence in indexes right now. That's really true. We'll take a look at where we are. My last chart here is where we are today, and massive divergences right now. And you'll see that those get resolved one way or the other, Daniel, either up or down. I mean, the divergences do not continue. They're not allowed. Basically, law of physics. So it's an interesting time we're living in right now, and there are lots of really kind of warning signs around that we talked about earlier. We'll talk about it in just a minute. Let's talk about some leveraged ETF trading strategies overall. Again, you have to define who you are. Are you a day trader, a swing trader, a position trader? And don't fool yourself, because that's the first mistake you're going to make. Then you have to study, practice, do your homework. You don't start out playing in the major leagues in baseball or at Carnegie Hall. You have to learn and pay your dues. It takes, they say, about 1,000 hours to a minimal proficiency. And I think that's really true. I think, you have to figure out what to buy, indexes, bonds, currencies. And then risk management is a key element. 1 to 2% of your account per trade. You want to diversify among asset classes. With the leveraged ETFs, you want to keep the holding period short. And I think the overall thing, if there's just one thing, is discipline. And that's where most people fail. The discipline, not follow your signal. How many times have you told yourself, well, I'll just hang on, it'll come back, let's see what happens tomorrow. Uh, Primary signal says to sell, but another secondary one says to buy. Nobody wants to take a loss. Nobody wants to admit they were wrong. And I think the key thing is to take your ego out of this, to have the discipline, trade mechanically, and have a system you know that works and stick with it. Because, folks, there's no holy grail, and there's no system that works all the time. And looking for that, you're going to be disappointed and you're going to fail. If that's the one thing I could really tell you, I've learned this the hard way over many years. It's just a discipline, stick with your program, and it's very, very tough, but you can learn how to do it. And I think that's the key. These things are learnable skills. I don't think there's any such thing as a born trader. You can learn how to do this. You can learn to be successful. You can make a living at this. It can be your job, but it's not automatic. And there's no easy way to do that. And I think that's the main thing you've got to understand going into this. So where are we now? Let's take a look at this. This slide I pulled yesterday on the S&P 17 October. Varsity, we have up in the right-hand corner, the upper right-hand corner, the RSI is going up, reaching overbought levels. You can see on the one-day MACD, we have a buy signal going on here. We have really a double, triple top for me. It blasted through this a little bit yesterday in that last finale, but I tell you what, it's still effective here as a double to kind of triple top. This last price trend has been up. We're above the 50-day average, 200 moving day averages. And so you can really see here that this looks like a bull market that's been overbought. It's getting frothy, certainly. Look at other indicators like the amount of margin debt that's in the market, the price earnings ratio. There are a lot of things here that are saying that it's reaching a top, and so that's, I think, where we find ourselves. It's a very, I would say, dangerous situation right now in the U.S. Market, but it's a great time to be a trader because you see a lot of action here, this up and down kind of action. That's what we're talking about, why ETFs, how to trade and invest, the golden crossover, the free trading system, and Charles Dow system, and where are we now? We're finishing up here just a couple minutes early. I don't know if we have any questions. We can go to that and then wrap it up. Okay, which sector might be the best to hide in? Well, I think my thing that's doing the best right now are the bonds. There's been a lot of motion in the bonds right now. I'm long bonds using TLT, and TLT is you go long and short. If you want to be aggressive, you go the UPTs, the 2X bonds. And I think that with all the action in the Fed and the rotation in and out of bonds, I think there are a lot of opportunities there. What services do we offer? We have a couple of different trading programs: a standard ETF, a bond, and an option ETF. Yeah, the options on the 2X and 3X are really exciting. Those are quite liquid, a lot of opportunity there. They trade like any other option, only they're amplified. There's also options on VIX. I do some VIX trading options. And I think that you're putting leverage on leverage, of course, with options. The way I do options is, and everybody does it differently. What I like is you buy an at the money or in the money, call or put far out in time. So I think what that does for you is it takes out some of the time decay problems that you get, and it gives you don't get the super leverage that you do from a far out of the money call or put. But it gives you 10x movement easily, and it then becomes a directional trade. So you can trade an option just like you would an index or a stock, and you don't have to worry about all the other tricky things, the time decay and it comes with options close. They're talking SJ wants to know how many months out. Right now I'm in December, and I try to stay 3 or 4 months out, and then probably no closer than 2 months out. So like right now, late October here, I'll be rolling over into January. And so I think that's really an opportunity that people don't usually look at. People think about options as, go for the big kill, the home run, buy something far out of the money. I think that's a real low percentage trade. As you know, most options expire worthless. So I think you have to protect yourself against that by either being a seller of options or buy them, pay more, but at the money or in the money, and then use that directional trade advantage. So emerging market ETFs, yeah, there are all kinds of leverage opportunities in emerging market ETFs. Brazil, India, uh, there's the EEM that has a leveraged version of that. And so emerging markets are always, they move fast. They're a little bit like the Russell 2000 here at home, that they tend to move fast. They provide you a lot of trading opportunities. Right now, they've been on an uptrend. They're kind of just follow us. You can kind of look at the S&P. It's still the S&P is still the heart of the world, really. I mean, you can talk about decoupling and how the world is decoupling. But I don't think that's really happening. You can see how Europe moves up and down with us, how Asia moves up and down with us. I go to China all the time. It's a Wild West economy there. It's uh, almost a lawless kind of capitalism. They're going to be important in the world, but they're not yet important. They're going to track with us. They're going to follow us. They're not independent of us. So trading China, there's a lot of opportunities there. FXI, there's an Ultra China ETF. So again, if you're looking at leverage opportunities in the emerging world, Japan and China, certainly they're out there. And TJ asked, with going that far out work with the 2x and 3x. Yeah, I think it does on an option, just because the thing that'll bite you on the options, is the time decay. Because the options are tricky. You got to be right, not only in the direction, but in the timing. It's got to happen with the time frame you're looking at. So I take out that time element, not have that work against you. That's, I think, to your advantage. So that's it. I see any more questions here. I think that's about it. Here's some counterparty risk and swaps and leverage ETFs on the road. Yeah, uh, that's not a mean question. You need to understand how these leverage ETFs work. They're very, very sophisticated programs and products. When they first came out, they were met with great excitement. Everybody jumped into them. And then a raft of lawsuits followed because the disclosures weren't clear enough. People didn't understand how they work. Uh, it's just a key factor that you need to really understand how the leverage ETF products work. A lot of people got burned, and you're not going to be one of those people because you tend to be shorter term traders and day traders. And it's a key thing there to understand that. And I can say that they're wonderful products if you use them correctly. It's kind of like playing with fire. It can heat your house or burn it down. So the delta 3 or 4 months out, when you go out like that, the delta really is almost a non-event because you're not holding it for that whole 3 to 4 month period. You're holding it for a short time period, and you're at the money or in the money, so you're getting a solid move either way on that directional trade. Sophie asks, what's the WSS trading system? Well, we have a free one that's basically the golden crossover that you can take a look at and learn about. And then we do various different programs within our systems itself. Again, it's standard ETFs, and we have a leverage ETFs, an option, and the bond. And so it depends who you are. If you want to be a bond trader, I like the bonds a lot. They're real stable. They're solid. You can leverage them. If you look at what hedge funds do, uh, my view, the ultimate situation is to take a solid, stable, low-risk system and then leverage it. That to me makes the most sense because overall I believe you're going to get the best performance in that strategy. So you look at the pantheon of possibilities. on the way far out risk side, you've got futures, commodities, options. On the most conservative side, you've got bonds, and so, and then in between you've got stocks and E-mini futures and all those other things. So let's think about this. So why not take a really low risk system, low risk vehicle, and then leverage it? And that is just a no-brainer. Find that a lot of the hedge funds use that exact same strategy. And so that's something to really think about. And the other thing that does for me personally is it takes out kind of the heat of the battle and the emotionalism and the enormous volatility. I know, I think I've had this experience. I'm sure you've had. The market moves against you. It feels like you just got punched in the stomach, and you're just like bent over. And so have a underlying asset doesn't do that to you. You're going to feel a lot better about things along the way. How many 2x and 3x ETFs are there? TG, I don't know. There are hundreds. I mean, Good in Direction and Pro Shares and Velocity Shares. I mean, you know, some are better than others. You can want to stay, of course, with the most liquid ones, biggest sectors. We got the indexes, finance. Energy. I try to stay with the major 8 sectors: energy, finance, consumer, the indexes, long and short, and so I don't see a reason to get real exotic and go into a non-liquid far out kind of thing. Just to be there. There are a lot of opportunities in the mainstream. Daniel says Forex is like lotto trading. Yeah, it really is. I think I tried it a little bit, wasn't too successful at it. ETFs give you a little better opportunity to trade Forex, like Euro ETXs, Canadian currency shares. If you go to a site called currencyshares.com, uh, trade everything you want there: Australian dollars, Canadian, Euro, US dollar, and so it's a lot of opportunity there for a retail investor without actually getting into a Forex account, which is very, very tough to do. I mean, that's the province of market makers and traders. Those markets are around and related, and so that to me looks a lot like gambling. So I would agree with a lot of. Sophie on the Delta again. When I buy these out in time, far out in time, the Delta I don't even really think about that much because it's not really a factor because you're in and out quickly. But position is so far out in time, it's not really a concern. Joseph says, "Hola, hello, hola, good morning." The Italian buongiorno. In the money or out of the money? Yeah, I like either in the money or right at the money. Because that way you're going to replicate as closely as possible movement of that underlying index. And it's really important to me to do that. That gives you an edge trading options. I would say in the money or one strike price out of the money. Where can I find a list of the 2x and 3x ETF options? Um, the easiest thing to do is go to your brokerage account and just check the option change. I can tell you that all the major sectors, finance, materials, indexes, all have options. Sophie, what service are offered? We have just a newsletter and a trading system. It's a subscription service, goes for 6 months. First month is actually 7 months. There's 1 month free, and it's guaranteed. And then for 6 months, we do daily updates and weekly trading up. All right. So I think that's about it. Looking like we're good here. Morgan, you still there? All right, Morgan, are you? Um, yeah, I can. You guys can use a. You can have this. That's fine. Yeah. Thank you, Michael. Yeah, appreciate you guys coming. It was really early in the morning, and I want to really applaud everybody who's here because uh, you're on the right track. You're going to be a professional, and it won't happen without a lot of work and blood, sweat, and tears. You can make this thing happen and really, really make it work for you. Well, thanks, you guys. Appreciate it all. Yeah, thank you all. Uh, how do you contact me? It's wallstreetsectorselector.com. You can see it up on the board there. There's an email address there. And what we do is, what I do is, it's a real personal thing, one-on-one. A lot of friends who are my clients. We talk on the phone, talk about it. And I look at this like we're all in it together. We're a team sport here. And if we help each other go along and get along, that's really what it's all about. And I learn from my clients, and they learn from me. It's a good situation overall. All right, Sanford, you around back there? Let's see. I miss if you use ITM, ATM, OTM, 3 months out. Yeah, you can do that. What I generally do is I don't use the leverage ETFs with the options. What I do the 3 to 4 months out is a standard ETF. Like I'll use the say XLF, XLE on the finance and energy, SPY on the S&P 500, DIA on the Dow. So that tends to work. I find my best comfort level in those standard ETF 3 or 4 months out, and you get plenty of leverage doing that. Believe me, I mean, it really is more than enough for me, and it gives you that opportunity to again have a directional trade over a long period of time that works for you. Yes, I use the 1X. I use the 1X funds with options. That's correct. Rich, where am I located? I live in Oregon, and I'm heading for Chicago today in a little bit. As soon as we get off the phone here, I'm going to get on a plane and head for Chicago. Not much to call to be on the East Coast, yeah, that's for sure. Well, I'm a long way from Wall Street. I think that's good, get into that Wall Street scene, and people get baffled by all the BS there, and it's main thing I found is you need to tune out all the noise, just with the internet these days, there's just an overwhelming barrage of noise and distraction. Yeah, just focus down, do what works for you. Use some tunnel vision and stick to your knitting. Do what you do best. How do you find option premiums on major ETFs? So with the option premiums, uh, I just go. I have a Charles Schwab account. I'm pretty basic. Just go in there and see what they're buying and selling for, and they're pretty easy to trade. The liquid ones are very easy, very flexible. Start out with a limit order, and it'll get filled generally that day. I don't do spreads, Kim. I think that spreads are fine, but I'm not that smart. If you want to really get to be an options maven, then need to be a math whiz. I have done some strangles, where you sell a call and sell a put, and if it stays in between there, then you make money on both sides. That's like being in the house. So if you that works really great unless you're in a high velocity market. So you sell a call, you sell a put, and then next day is within those two ranges. You collect the premium on both sides, and so that's then you become really the house. Different subject for options, it works fine. Have I been trading the solar ETF lately? No, I haven't. Solar's obviously been on the move, and I like solar, uh, but I have not been it lately. You trade closing options days. I try not to. I'll usually get out, like say a week before they roll over, because that options expiration day tends to be, extreme volatility and just all kinds of things happen. The big guys come in and start beating you up. So I don't think that's a real good day for me. It might work for other people. It doesn't work for me. Alrighty. So it looks like 4 minutes left here. Again, shoot me an email or check out the site at wallstreetsectorselector.com, and I'd be happy to work with you, and anything I can do for you, uh, I'll be happy to do that. Manage separate accounts? No, I don't. I'm just strictly an educational, informational service. The option premiums on major ETFs reasonable? Oh yeah, they're very reasonable. The bid and ask price, the spreads are close, and they're reasonably priced. You can get in, XLF. If you look at the option on XLF, I mean it's a very very cheap way to get into that marketplace. Spider is a little more expensive. Bond options are cheaper. XLE, the energy options, quite cheap. So yeah, I mean, you can get into this with not a lot of money, and it's an easy way to do that. Which are my favorites? So SJ asked which are my favorites in the options. Okay, the indexes, SPY, of course, the Spider. I like IWM. It's reasonably priced. Small cap, you get a lot of motion on that one. Uh, and then XLF is cheap. Financials tend to be real movable. I like XLE, the energy option. So you can see if you look at the spider select sector, the XLE, XLF, XLY, that's where I tend to stay with the options. And with the indexes, the SPY is probably the best, most liquid, but it's a little more on the expensive side. Yeah, I'm on LinkedIn, and what do you see the short-term trend? Well, I think that we're nearing a top here. I mean, eventually fundamentals are going to win out. This thing has been so momentum based and so emotionally based in QE3. If you look at all the big bubbles in history, I mean, going back to 1929, fundamentals eventually do win. I mean, they always do win. And if you look, I didn't have it on this presentation, but if you look at a chart of the PE ratios, where we are right now in the market is at the same level as it was before the 1929 crash, the 2000 crash, the 2007 crash. So, I mean, we are really, really at an overextended spot here, and these things don't go on forever. They just don't. And so I would say we're in an overextended, frothy market. That's a dangerous situation. Have you ever compared using option 1x using 3x? Uh, as I mentioned, I like the 1x a lot better. I think you have a lot better, the way I do them, you have a lot better chance with that. The 3x, if you want to do a 3x option, then you need to be on a shorter time frame because of the way those things are repriced every day. Shota, can you recommend for learning options, not the Shark Institute? No, I don't know anything about the Shark Institute. Um, I have a good friend, Chicago. He's an options guy, Dan Passarelli. He does some trading education. You could ask Morgan and Tom here if they have any suggestions for option traders as well. Uh, how high can the Fed run this thing before common sense wins out? Well, Daniel, man, that's the question, isn't it? I mean, uh, I think we're nearing the end of the road. They're going to run out of bonds to buy. The market's not going to let them continue this forever. Uh, we're working ourselves into a corner from which there's going to be no easy escape. In more ways than one. Yeah, that's for sure. I mean, you look at the debt in the country, and you look at he's facing major, major issues coming up here. Yeah, tremendous air under the Dow, and you look at what happened the other day there with IBM and their earnings, and you could see yesterday. I mean, the Dow, they got that bifurcated market. The IBM, was down, the Dow was down, the S&P was up, Nasdaq was up, and it was miraculously saved at the end. Uh, so I think it's a wobbly situation we're in. I mean, there's no question about that.